to go over, and Dabur's come out with numbers just a while back. In fact, the numbers came out, I think, just less than half an hour ago, and they look pretty good. The volume growth is about 5.2%. The poll was expecting, growth of around 5 to 6%, and we're looking at the EBITDA rising by about 8.3% year on year. That's come through. To talk about this, we have with us Mr. Mohit Malhotra, the CEO of Dabur India. Mr. Malhotra, great to have you on. Thanks for joining in. And I'm going to take off from, where we left last quarter, where you were telling us that the rural recovery is really looking strong. So tell us more. How has rural performed, and what's the difference between urban and rural growth for you right now? This 5% volume, how much of it is rural India? How much is urban?
Right. Thank you for having me. So rural definitely for past 3 quarters is inching ahead of urban. For it's around 350 basis points ahead. Rural is ahead of urban. My rural growth was 9% and urban growth was in the range of around 5%. So therefore overall around 7%. And we are very positive about rural, and that's how the growth has been coming. So we've been putting ahead of the curve. A lot of distribution initiatives in rural, a lot of activations have happened in the rural. And third vector has been a lot of media has been increased in FTA channels. There's a 50% increase in the media for mobilizing demand in the rural. So all this has paid off, and 9% rural growth is, we are very happy with it. Yeah.
That's absolutely fantastic. I think last quarter you were 8% rural growth. Now that's moving up to 9%. Given the strength of the rural recovery and what you're seeing, would you want to increase your overall guidance? I think you were at about 8 to 9% growth for the full year. But now with rural doing so well, would you look at double-digit growth?
I think we really don't know how it, waves up. So while the monsoon has been great and the government outlay also has been increased for rural, for both agriculture and also the rural sector. So I think sequentially there should be improvement. And 4, 5, 6% has been sequential in past 3 quarters. We expect improvement to happen. To give an exact guidance, it will be very difficult for me to give, but we stick to our guidance for the full year, which is high single-digit kind of a volume growth, and majority of the growth will only come from volume because there's not much of a price increase there, maybe a 2% on price increase, and rest will all come from volume growth driven by rural recovery.
Okay, so high single-digit kind of volume growth, and you expect the sequential recovery in volumes to continue. So rural, at least comfortably, we can say should be in double digits, right?
We think so, yeah.
Yeah. Okay. What about the international business? What's the sustainable revenue growth for the next 3 quarters?
The international business has grown by around 18.4%, and international business across markets has been growing at double digits for us. MENA, which is a very big percentage of our business, has grown by around 12.5%. Turkey business around 18%. Egypt has been growing at around 64%. Etc. So overall 18%. So we expect a double-digit growth trajectory to continue for the full year in constant currency in international business. For us, there has been currency depreciation. That's why the translated growth in India has been low. But double-digit constant currency growth on back of market share increases in consolidating our business in all our international markets will continue going forward.
Right. Mohit, hi. So just 2 points. One, have you taken price? You indicated last time some 2-3% price increases. Have increases come through in the quarter?
See, we've taken around 2% price increases in the quarter. Major price increases are flow through from our previous quarters to this quarter. If you look at the overall price increases are to the tune of around 5 to 6% in our healthcare, around 1% in our home and personal care, and no price increases in our beverage portfolio. So that's the way the price increases have been. Inflation is coming down. Overall, we've seen deflation in the quarter of around 2% or deflation. But as the food prices backed by fruits, vegetables, cereals is inching up, the food inflation is high in the country. So we might take some price increases in our foods portfolio going forward. Yeah.
Mr. Malhotra, since you mentioned beverages, I have to ask you this, right? Because the quarter also saw lots of noise around what can be called 100% real juice and what can't be, the FSSAI ruling. What has been Dabur's approach? Did you undertake any new branding or rebranding exercise? And did that have any impact on demand, on the sales?
Not at all. I think as of now, there's nothing. And whatever happens will be happening for the entire industry. So I think Dabur will not be an exception to whatever is happening in the industry. But we have made representations to FSSAI, and scientific board of FSSAI is actually evaluating on what the industry has to say. So CII, FICCI, and we are a part of it, and we've represented to them. And they shall come back to us on the labeling requirements for the juices, yes. But we are 100% juice, so therefore representations have actually gone to them.
Last quarter, you had gained about a 20 basis points market share in oral care. What's the market share in the current quarter? Because one of your peers, Colgate, reported some very strong numbers.
Yeah. So I think our numbers in the oral care category, we've gained around 15 basis point market share in oral care. The herbal category continues to grow ahead of the non-herbal category, and herbal category is now around 31% of the overall market, and we are market leaders in the herbal category. We're growing the category as leaders ourselves, and the Red Toothpaste, which is our flagship brand, continues to do very well and gain market shares. Our growth in oral care has been to the tune of around 12.2% in secondary terms and 11% in primary terms, mainly driven by, again, volume surges of around 8% there. Yeah.
Okay, and final question on margins, Mr. Malhotra. You're very close to 20%, and you're saying that raw material inflation has actually come off. You're looking at some more select price hikes as well. So is 20% plus, is that a territory that you think you will be in for the rest of the year?
Again, guidance is difficult for us to give. We've increased our gross margin on back of inflation and some price increases that we have taken. Apart from the gross margin increase, we've invested in media. Our media has grown by around 15%, which is double of our top line growth of 7%. So we'll continue to invest behind media. And whatever balance, Samriddhi benefit and cost optimization that we do during the course of the year will flow into our operating margin. So it will definitely be better than last year, but I can't really tell you how much to what level it is. 19.6 is what we registered. So I don't know to what extent it will be great. Giving you guidance is actually difficult at this stage. But
Mohit,
we
thank
will
you.
definitely maintain or be better in margins, yes.
Okay, so double-digit volume growth, high single-digit volume growth, and will maintain or do better on the margin front. Thank you very much, Mohit, for joining in.